So it's the week before the budget, and I thought what better time to take stock, have a look at what we know, and have a look at what we have seen in the press and what we might expect from the budget next week on the 11th of March. I'm talking, by the way, on Monday the 2nd of March, just in case there's some developments, as there usually are 2 or 3 hours after I've spoken. Now, the backdrop to the budget we can't have missed, although of course there's been other stuff in the press, we can't have missed the fact there's a bit of a squeeze on the government. So they have promises they made in the manifesto and through the election to equal up Britain, spending promises that are quite tough, quite ambitious. On the other hand, we have an uncertain, to say the least, economic future ahead of us, it seems. We have the Bank of England, we have the OBR saying that actually balancing the current account is going to be quite difficult by 2022-23. The uncertainty around what sort of Brexit we have, the current uncertainty around coronavirus. The whole thing means that we have a tough economic environment, but we have hard promises to make. We have the National Audit Office who have said, and by the way, when you're looking at reliefs and exemptions, which cost £155 billion a year, you ought to look quite closely at whether they're achieving their objectives. So looking at all of that, seeing the squeeze that's on the government as to where they get that money from, quite understandably, that's why we've seen quite a lot of press around potential changes to reliefs and exemptions. Now, by the way, the other constraint that the government have, of course, is their promise in the manifesto and pre-election that there will be a freeze on income tax, VAT and national insurance. So there's no way to go there to increase those rates. Of course, they can play around with how the tax works, but on the face of it, they can't increase the rates if they're going to stick with that promise. There is an underlying aspiration, we know, to raise the thresholds for national insurance. Whether we get to that in this budget is highly debatable. Of course, the other thing around this budget is, of course, it won't be the first one that we have in this year. We have this budget on the 11th of March, and we'll also have the scheduled budget, the autumn budget, towards the end of the year. Now, there is thinking that maybe some of the harder changes that the government might be thinking about making will be pushed out until the October budget. There's been no certainty, as you'd expect, there's no formal statements, but that is a definite possibility, especially for those changes that need a little more consideration. I mean, governments in the past, leading up to now, have been a little more predisposed to consult before making more the deeper changes that we have. So that's income tax covered. How about capital gains tax? Nothing specific was in the manifesto, but what we've seen in the press very recently, even this weekend, especially this weekend, has been talk of a complete abolition of entrepreneurs' relief. Now, in the manifesto, the government did say that they were committed to reviewing entrepreneurs' relief. So that's reviewing, not abolishing. So we've had nothing from the mouth of the Chancellor or the government saying there's going to be an abolition of entrepreneurs' relief. You wouldn't expect that in the time leading up to the government, and you would also not expect that of a Conservative government. I mean, on the face of it, you get one view put forward rather superficially, I think, that, oh, it's just a tax let-off for the rich. People who've already made their money are now getting a 10% tax rate. Or maybe a better way to look at it is to take a National Audit Office view, in effect, to say, but entrepreneurs' relief is put there to encourage people to build businesses. And when they build that business successfully and decide to sell it, a buyer will pay what it's worth, usually. And the paying of what it's worth by that buyer, a transaction between two arm's-length people, is an indication of the building of value, which is what that entrepreneurs' relief, the low tax rate, is designed to encourage. So it seems to me to be something rather different to a tax let-off to the rich, but that's just my view. Whether there'll be a change, who knows? I've had two questions actually at conferences over the last couple of weeks where people have said, should I sell my business before the 11th of March? Well, actually probably should be by the 10th of March. So before the 11th of March, yes. The answer is, well, if you haven't got a buyer yet, it's highly unlikely you'll be able to do that in practice. But if you do have a buyer, and both of these two cases, the buyer was there, the papers have been done, the due diligence had been done. It was a case of they were waiting until the 6th of April to make the disposal, so for a cash flow reason, so that they didn't then pay the tax till the January of the tax following. My view there was, given the amount of press there's been around this and the chance, I suppose, that entrepreneurs' relief could go, that if you were in that position, then you would probably take the view on a risk-reward basis of selling your business now. But as I said, in practice, that isn't going to be feasible for most people. Any other CGT changes? There's been nothing talked about. So it's entrepreneurs' relief where all the focus has been. Understandably, you've had a lot of representations made by the CBI and the Federation for Small Businesses, etc., saying this is something you should definitely keep in one form or another. And we have had one form or another of entrepreneurs relief, retirement relief over a number of years now. So business taxation, we know pretty much for certain that we're not going to see the drop of corporation tax from 19% to 17%. That will save £6 billion. By the way, that entrepreneurs relief point, the amount in question is just over £4 billion, I think. So it is material. The next thing after that, what are we looking at? Inheritance tax, yes, something has been said, but not in the manifesto. I've mentioned it before, so I'll say that, look, inheritance tax isn't a big tax generator. So if the biggest motivation to the government is get money in to fulfill those promises, IHT isn't going to do it. But a technical change, a change that is aligned with the direction of travel, as it were, of this new Conservative government, yeah, we certainly couldn't rule that out. We have the OTS proposals I've talked about before. We have the more radical all-party parliamentary group for intergenerational and inheritance tax fairness. There, I said it. The APPG-IIF proposals, which again I've covered in other bulletins. They're more radical, broadly saying, look, we should have a much broader tax base, 10%, a 10% tax rate, and 20% over £2 million, and get rid of all the reliefs. Broadly speaking, that's it. There's a lot more detail, and you can find that on TechLink, as you can on the Office of Tax Simplification provisions. How about pensions? Has there been talk around pensions? Yes, but over the last couple of days, no. And what we've heard, well, the last indication from the press is people are thinking that the Chancellor is going, actually, maybe not introduce that change or any changes at this point, because it's a bit more complex than let's just remove high rate relief. It's a bit more complex than that. Of course, we do have that lifetime allowance issue to consider for high paid public sector workers. So I think if they're going to do something about pensions, and you certainly couldn't rule that out because of the amount of money involved, that's nearly £50 billion. So if they're searching for money and looking to align with the National Audit Office encouragement to make sure that reliefs are doing their job, then you'd certainly have a look at pensions. Now, whether a big change is made in this budget or not is another issue. It may well be that it's pushed out until October. It may be that when the change comes in, it's from the beginning of the tax year. Who knows? All you can say is, once again, that well-said message, if you have the relief available and have the money available, perhaps take the action before the budget rather than later. I would expect some change, but maybe not necessarily on the 11th of March, and maybe some further consultation, but who knows? Famous last words, as they say. Anti-avoidance, we will inevitably see some further anti-avoidance provisions, probably some more targeted anti-avoidance rules about schemes that we don't even know about, generally us, regular public. Some talk there has been around some action around family investment companies, FICOs. There is apparently a large high net worth unit at the government, the Treasury, the Revenue, who look at the affairs of people with more than £20 million. And as a part of that group, they've been looking at FICOs, family investment companies, on the basis that they seem to be a way of doing estate planning with control, even when you make a gift of more than £325,000, control through share classes by making potentially exempt transfers and therefore stepping outside of the relevant property regime. So whether any action results, who knows? How existing FICOs would be treated, who knows? They are proper legal structures, they do exist, but of course until you die you don't see the effect from an inheritance tax standpoint. But transactions that have already been made, I very much doubt would need to be, or would be taxed differently. I can't see that happening at all, but clearly there seems to be a truth underlying that they are being looked at, and so we could see some change. So that's where we are in relation to all of that. I would encourage, as I do at this time of year anyway, a tax health check. Carry out a tax health check just to make sure that your clients have at least considered the use of their annual exemptions, allowances, and tax efficiencies. No reason not to do that. It's a great time of year to do that. Actually, we have the end of the tax year coming up, coinciding with a budget on the 11th of March coming in just before the end of the tax year. So lots and lots for you to talk to your clients about that will be of value to them, will be of relevance to them, tremendous engagement opportunities, and most importantly, opportunities to deliver all-important tax alpha that will lead to the improvement, hopefully, of your clients' financial well-being and the good feeling they have about the great quality of the advice that you give them.